Italy shifts trade focus to Canada amid U.S. tariff tensions. Canada's shocking EV deal with EU Tesla caught in the crossfire. Good evening, I'm Sal Pier and welcome to Sal's World News. Tonight, we turn our focus to a major economic shakeup that is catching even the European Union by surprise. As tensions rise over the latest round of U.S. tariffs, Italy appears to be forging a new economic path, one that may leave the United States on the sidelines in favor of Canada. President Donald Trump's aggressive tariff policies have once again taken center stage on the global economic stage. His administration recently confirmed the implementation of 25% tariffs on Canada and Mexico, with varying rates of 10% to 60% on Chinese imports. The new measures, set to take effect on March 4th, have triggered heightened concerns among U.S. trading partners, particularly in Canada. In response, Ottawa has been actively seeking new alliances to mitigate economic fallout. While initial outreach included China and the European Union, the biggest surprise came as Italy emerged as a key player in Canada's strategic realignment. Over recent months, Canada and Italy have increasingly been mentioned together in economic circles. Analysts suggest that Italy is positioning itself as a leading alternative trade partner for Canada, particularly in the agri-food sector. With Italian exports to Canada reaching an impressive $1.5 billion annually, the European nation has surpassed France as Canada's third-largest food supplier, trailing only the United States and Mexico. The foundation for this shift was laid in 2017 with the implementation of the Comprehensive Economic and Trade Agreement (CETA) between Canada and the EU. This agreement significantly reduced trade barriers, paving the way for increased Italian exports, particularly in wine, dairy, olive oil, rice, and pasta. With the U.S.-Canada trade relationship under strain, Italy is stepping in to expand its foothold in key Canadian markets. Sectors such as packaged food, alcoholic beverages, and specialty dairy products stand to benefit the most. Italy's renowned food and beverage industry has already seen a steady increase in exports to Canada, and this trend is expected to accelerate further if Ottawa chooses to impose retaliatory tariffs on American goods. Beyond food, Italy and Canada are exploring stronger cooperation in multiple industries, including critical minerals, semiconductors, aerospace, clean energy, and cybersecurity. The two nations recently signed a roadmap for enhanced cooperation, emphasizing shared interests in climate action, global security, and trade diversification. As part of its broader trade pivot, Italy is working closely with Canada on energy security and sustainability initiatives. Both countries are committed to clean energy development, hydrogen fuel technologies, and the phase-out of coal power generation. Italy is also considering joining Canada in the Alliance for Sustainable Critical Minerals, strengthening their collaboration in raw material sourcing. Security cooperation is another pillar of this growing relationship. Italy and Canada are deepening their defense and cybersecurity ties, working together through NATO, the G7, and Interpol to combat cyber threats, organized crime, and foreign interference. With tensions escalating between Washington and Ottawa, Italy's increasing presence in the Canadian market raises important questions. Could this shift signal a long-term restructuring of global trade alliances? While the U.S. has historically been Canada's dominant trading partner, the current administration's protectionist policies may be pushing Canada to diversify its economic dependencies. For now, Italy seems posed to seize the opportunity created by Washington's trade war, a move that could have lasting implications for North American and European trade relations. As we approach the March 4th tariff deadline, all eyes will be on how these developments unfold. The tariff battle between the United States versus Canada and Europe is a war on two fronts started by the U.S., and it is shaping up to be messy before it gets cleaned up. It surely seems that everyone is set to lose. Let's dive into a seismic shift in North America's economic landscape. Canada has just dropped a bombshell, forging a bold new electric vehicle trade deal with the European Union, and folks, this could spell big trouble for Tesla and the broader U.S. auto industry. Let's break it down. For years, Canada has aggressively pushed for greener transportation. In 2021, the government set an ambitious target. By 2025, 1 in 10 cars sold would be electric. Thanks to incentives and investments in battery minerals, they hit that goal 2 years early. But now, A massive trade war is brewing, and the stakes couldn't be higher. President Donald Trump, running on an America First revival, has announced a potential 100% tariff on all Canadian-made vehicles and metals entering the U.S. The move has stunned Ottawa, igniting fierce political backlash. Why? Because Canada sends over 2 million vehicles across the border each year, along with billions in steel and aluminum crucial for American manufacturing. Trump argues that tariffs are about national security and protecting U.S. jobs, but in Canada, it's seen as economic warfare, and they're not backing down. In response to Trump's aggressive trade stance, Canadian officials are considering a drastic retaliatory measure, a 100% tariff on Tesla vehicles entering the country. That's right, Tesla, America's crown jewel of electric vehicles, could soon face sky-high prices in Canada, doubling the cost of a Model Y overnight. Why target Tesla? It's both strategic and symbolic. The company has thrived in Canada, selling over 50,000 EVs last year, and relying on Canadian minerals for battery production. A tariff could cripple Tesla's Canadian sales while shaking up its supply chain. Simply put, Canada is showing it has leverage. With the U.S. market in jeopardy, Canada is looking across the Atlantic. The Comprehensive Economic and Trade Agreement (CETA) at the EU has already boosted Canadian exports by 30% since 2017. Now, Ottawa is eyeing Europe as a major alternative for auto and metal trade. But can it work? The EU offers tariff-free access and a booming EV market, but shipping costs and regulatory barriers pose challenges. Still, European automakers like Volkswagen and Renault may be keen on Canadian battery minerals, giving Canada an edge in future negotiations. This trade war is escalating fast, and the fallout could be enormous. American consumers might see vehicle prices soar, Canadian jobs could be at risk, and Tesla could face a brutal financial hit. Will cooler heads prevail, or are we heading for an all-out economic showdown? One thing's for sure, Canada's not bluffing. With Europe as its backup plan, Ottawa is sending a clear message: if pushed, it will fight back. And Tesla, it's caught in the middle of a geopolitical chess match with billions on the line. As for the dream of having Canada as the 51st state, oh Canada, what an unrealistic dream. Stay tuned to Sal's World News for the latest updates on this high-stakes trade battle. I'm Sal Pier. Please do not forget to subscribe to the channel, like and share our videos. We'll be able to bring you even better reports and analysis. Thank you so much.